So it's really getting to a point that these are where I do most of my option trades right now. When you're an investor, you have a few different choices or options. You have found a way to successfully build your investment portfolio with just two options. That's right, two. Okay, and that's gonna be SPY and QQQ. You could easily build a trading strategy around SPY and QQQ and save yourself a lot of time looking for other stocks to trade options on. Now, the strategy is gonna be based on a combination between charting, technical analysis, and fundamentals with a little bit of patience sprinkled in there. QQQ is a popular exchange traded fund brought to us by Invesco that mirrors the performance of the NASDAQ 100 index. Okay, so NASDAQ has 100 of the top big tech stocks. Now keep in mind, remember that. SPY, now these are going to be 500 of the largest companies in all different sectors. Okay, so think about our Amazons, your Googles, Teslas, Johnson & Johnson, JP Morgan, Visa, Meta, Home Depot. Literally every top stock in all of the sectors has a place in S&P 500. So you can see where its power comes from. It literally has a little piece of everybody in there. It's also one of the most traded with the highest trading volume. Big tech stocks make up about a fourth of S&P 500. So that's just a small percentage. In a way, there's a little bit of QQQ in SPY. What's attractive about trading options on these ETFs, they have a large market of different strike prices, different expiration dates for multiple different trading strategies. You'll usually see 3 different expiration dates throughout the week for these stocks. So you'll see an expiration date on Monday, Wednesday, and Friday because they're the most popular and highest traded ETFs. They'll also usually have a closer bid and an ask spread. Your entry price is reasonably sized. Shorter term options are generally cheaper. It's very easy to find SPY and QQQ options with premiums under $1 or basically under $100 with a decent delta return. Now the downside is that these are individual entities. So one of the upsides is that they're indeed stable, and a term you may have heard before is beta. I think we talked about it before when we were talking about making stock screeners, and when we're making stock screeners, we want to look for stocks that have a beta of 1. And basically beta is a measure of the expected move in a stock compared to the overall market. That's why we want a decent beta. Beta higher than 1 is a volatile stock. Beta less than 1 has lower volatility. SPY and QQQ, they have a beta of 1, so these are going to be stable stocks. Some of the basics for your strategies. We're going to get into the technical analysis and system breakdown towards the end of the video. But first, you want to know what your trading style is. For long-term investors and a little bit more short-term, these cycled options every week are extremely liquid, they're cheap, and they have the potential to move quite a bit in a day. For day trading and short-term swing trades, look for SPY and QQQ options that expire within 7 days. You know, you shouldn't need to go too much farther than that if you're day trading. At that point, if you're looking at expiration dates further out, honestly, you're going to be paying a lot more for that option's time value. You're not going to use it. If we aren't using more than a day of time, try not to make a habit of turning day trades into swing trades unless it's necessary. You might just want to cut those losses. That's all I'm saying. Okay, and I also just wanted to add this because I didn't mention this in this video, but Webull just added the option to roll your options, no pun intended. And with this, if you have a short-term expiration option and your day trade did turn into a swing trade, you can just roll that option position out to a further expiration date with just a small fee versus just letting that option expire completely out of the money. So definitely look into options. I'll have a video on that soon. But back to this one. For example, if I'm day trading SPY options on Monday, then I might might look at the Friday or the following Monday expiration dates. So just to give a little bit more wiggle room, be very cautious with holding over the weekend because it's possible for something to go against you during after hours and wipe out your trade. So don't do that to yourself. These short-term options are very volatile, so you'll need to have the right process to choose your options when you're trading SPY and QQQ. So the first thing that you would want to do is focus on implied volatility. So you can think of option implied volatility similar to car insurance. You're going to have your premiums. Safe and steady drivers have a lower car insurance or premiums. Safe, steady, and lower volatile stocks have lower option premiums. Hey, crazy and reckless drivers have a much higher premium. All right, so that's going to be it for this video. Deuces.